All right, okay. Hello and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen. Monday. It's a new week, new start, and let's see what this week has prepared for us. And I think that okay, it's going to be less maybe interesting in terms of economic data sets, but look, it's the last full week of September, and basically we might get a few shifts here and there. So keep an eye on everything. Let's check out the markets together, ladies and gentlemen. So stick around. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. Welcome. Sorry about the little pause there with the camera. I was trying to fix it, and I think the settings over the weekend, I don't know, something happened maybe, but the settings are off. Look, ladies and gentlemen, welcome. I want to welcome you to the kind of the last the last Monday. No, wait, the last Monday of a full September week. There we go. Oh, there we go. We will still have another we'll still have another Monday, but it's not going to be for a full week. So yeah, this is kind of the last full week of September. So I hope you're all feeling nice and refreshed after the weekend, and you're ready to hit the markets. Look. We'll dig in. We'll dig in everything, what's happening, and what to expect this week. In general, should be theoretically somewhat of a more calm week, but again, of course, we understand that nothing nowadays is calm. Everything is just, if there are no economic events, then basically, some sort of geopolitical tensions arise, or maybe some sort of another thing in the crypto world appears, or maybe something happens in the equity world between companies, and so look, about all this and a little bit more in a bit. First, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. In the meantime, I will put my usual good morning in the chat room. Good morning, everyone. There we go. Let me just see. There we go, ladies and gentlemen. So yes, look, this session is always meant for people who, who want to grab a cup of coffee or tea or just maybe some water, and just kind of relax. Get a calm start into the markets. Before the market opens up. Well, actually, the European market is already open, but if you're maybe preparing yourselves for the US for the rest of the day, so yes, grab yourself some hot drink, a cold drink, and yes, let's talk markets. It's an open session. I mean, anybody can comment, anybody can talk, and anybody can ask a question, and just feel free to do it in the chat. And there's it's more than welcomed. So yeah, that's the kind of little introduction. Look, ladies and gentlemen, also just a quick mentioning that tomorrow. Oh, by the way, before we jump into the markets, let me just the wrong page, wrong screen. There, that's my OBS in there. And this is where, morning. There we go. Let me just adjust the screen. There we go, ladies and gentlemen. Now it's better. Look, what I wanted to say while I rudely interrupted myself. Markets.com website. You can always check it out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, also just a quick mentioning, like I said, this the webinar that I'm going to be running tomorrow. So join in. You can find the description in the video, or the link for the description. Sorry, the link for the webinar in the description of this video. There we go. Third time lucky. So we can, like I said, this is going to be a webinar on RSI, relative strength in index, and basically how to apply it. And we'll look at historic events and price action, and most importantly we'll try to apply it in real life market action on our demo account, of course, and we'll see how we can position ourselves carefully, and what kind of what could happen, and basically like in real life. So it's the second webinar of such series. The first one was on the MACD. It was a good one. I think it was great. So yes, check us out. Check out the link in the description below. So yes, and I'm really more than happy to see you joining in tomorrow. Economic calendar, ladies and gentlemen. Let's jump into the markets. Now, first of all, Monday. What we got this morning? We got the Chinese LPR, loan prime rate for the 1 year and 5 year. So those both came out as expected. The 1 year at 3 and the 5 year at 3.5%. So nothing major in a way. We'll check out how how China reacted to this. There was some positivity, but I'll get to that point in a bit. So yes, we're getting the UN General Assembly, so also something to keep in mind. So if you remember, I said that even if there's not much like economic data, the UN General Assembly is something to be watched. Now, look, of course, we'll keep an eye on that. Certainly going further today, we're getting the PPIs, the US PPIs. Those are expected to come out on the higher side a little bit on the month-on-month basis. So we'll see how that plays out. Of course, if it does come out on the higher side, then maybe that could boost the Canadian dollar a little bit. Going further today, nothing major. We have a speech, Mr. Myron, or whichever you want to call him, but that's the new appointee by the current White House administration. And what's interesting the most is that he's still employed by the White House. So, talk about Fed's independence, right? So yeah, we'll keep an eye on that. Bailey is set to speak as well. I think he's speaking at the London School of Economics, so it's going to be an interesting one there as well. After last week's interest rate decision. So yeah, and going further, Tuesday we're going to get the Australian flash PMI. So in general, this week is more of a PMI thing. We're going to be getting like composite manufacturing and services PMIs from various countries, and those are going to be the flash ones, the estimates. So first, like I said, Australia, here we go. We have some, we don't have any expectations, but I think I've checked last time on different other sources. It was all over the place. Germany, European Union, the United Kingdom. So yes, all these guys are reporting as well. Data seems to be mixed a little bit, so I'm not really gonna say anything until the numbers are gonna come out. Basically, they're very difficult to speculate, and basically also the fact that we're having some other events. Yes, if these are important, but these are flash, these are estimates. Of course, for some might say, but hey, it'll give us an estimate at least on how how to position ourselves for the final one and what to expect in the final one. True, don't get me wrong, true. But certainly, I think that we'll keep an eye on other economic data, for example, and some speeches. That's what's going to happen. The U.S. is going to also deliver the flash PMIs, composite manufacturing services later on. So yes, like I said, we're getting some speeches from the some bank officials, from major bank officials. So that's why those PMIs are important. But I think maybe the market could react to the speeches. So be very careful if suddenly you don't understand why the market suddenly started moving in a wild fashion, then just to let you know that maybe somebody is speaking in terms of the central bank officials. Wednesday, going further, of course, Japan also coming out with composite manufacturing services PMIs, the flash ones. But what we're going to be keeping an eye on is the monthly CPI indicator from Australia. And look, the current RBA inflation target is between 2 and 3%. So it's kind of still within the target on the higher, closer to the higher side of that target. But yeah, it's going to be quite important to see because look, the RBA right now is still on on the same path. It's not really doing anything. Let me just remind myself very quickly: are we planning to see any interest rate cuts or hikes or something like that? Because look, during the August meeting, we got the cut, right? The 25 basis point cut from 3.85 to 3.6. At the end of September, the 30th of September, we're getting the interest rate decision. So we're not expecting to see anything. 3.6 is the rate that is expected to remain. So, but if suddenly this number comes out on the higher side, well, I think that what's going to be interesting is that not that the bank will go for a hike or anything like that, but what might happen is that maybe the rhetoric will change. Maybe they'll say, you know what, we're kind of done with the cuts for now. We're going to be like data dependent and all that stuff, and that means that the bank could be considering maybe reversing and towards the hawkish side. So right, like, so we'll keep an eye on that one, of course. That's going to be quite important. Now, IFO business climate numbers coming out from Germany. We're expecting a better number than the previous. So, yep, let's see how that's going to play out. If we do get a nice good number here to the upside above forecast, this could help the euro against its major counterparts. Going into the US further here, look, oh, what's interesting here, the 30-year mortgage rate, 6.39. That's an interesting, yes. So 6.39 keeps on declining. I think that what they're trying to boost is the housing market, because that has been a little bit on the diminishing side, I would say. Yeah. So also looking at new home sales, we're expecting a lower number. Building permits, we're expecting a drop here. So basically, there is a little bit of a decline in the housing market due to the fact that maybe people are opting out to not to buy anything right now because, again, well, we understand that prices are high and maybe at their peaks. Interest rates are maybe not the most favorite ones right now. So it's all this nice combo, and it seems like it's becoming more of a buyer's market, which is not bad, again. But there's always has to be a balance in everywhere, in everything, buyers and sellers. You can't have too much buyer's market, then it shows kind of maybe the economy is too sluggish. But then if it's a seller's market, then you might have overinflation. So yeah. Way too high prices on real estate. So for now, we're just keeping an eye on this very carefully, and we'll go from there. If we suddenly get a much lower number than the current forecast, then that could shake a little bit the indices, in my opinion. Interesting number on Thursday: car production UK. That's one of their top exports, and if the car production suddenly goes down, then we can understand that maybe it's not everything is that good in the UK economy. However, there are some deals done right now, so maybe the number could come out on the higher side. But in general, it has been picking up. Last time it jumped into positive territory, so let's see what the September number will be. BOJ monetary policy meeting minutes. Look, I don't expect much, but okay, the market can the market may just kind of react to that, just out of the absence of just kind of nothing in general, any other info. So yeah, like I said, for me the minutes, yeah, they're interesting and they're nice, but it's kind of repetition of what has been said, so what we already know. But I might be wrong. Somebody might say, but no, that's very important. Okay, that's very important, but we already kind of know stuff like that. Anyway, we know what's interesting here is that to see if the wording will say something like, "Oh, we're ready for a hike in October," because that's what the bank is planning to do. The Bank of Japan. So we'll see how that plays out, of course. But for now, let's be on the careful side a little bit. Going further on Thursday, we get the GfK consumer confidence from Germany. That's an interesting one, and most importantly is the Swiss National Bank interest rate decision, ladies and gentlemen. So if you are trading something Swiss related, like the Swiss franc, well, keep your eyes on that, because again, we're expecting the number to remain the same at 0. I think it seems like they're not willing to drop the rate yet, but I think that, yeah, I think for now it's look, the Swiss franc is on the stronger side right now. So again, some currencies, actually we'll take a look without even guessing. We will take a look. But yeah, if the number comes out on the lower side, again, we're expecting to see. We want to see what's going to happen, and how they will approach this, and will there be some sort of like a commentary to that, in terms of what are they expecting further? Are they thinking that they need to control inflation, or what's the case? Because to be honest, to control inflation, there's nothing to control, because their current inflation the year-on-year number is at plus 0.2. So that's correct, plus 0.2. So and it remains on the low side right now. So basically, they want to continue boosting the spending, but it seems like there's a little bit of a slowing down moment in that sense. Anyway, going further down the line here, what else do we have here? We have some speeches here again, but continuing initial and continuous jobless claims coming out on Thursday. Yes, of course, the usual thing here. But what's interesting, durable goods orders, those are going to be watched very carefully. So yes, keep your eyes on the durable goods. Growth rate, the GDP growth rate, Q on Q final. Okay, we are expecting a good number, a very good number. Look at this. We're expecting a 3.3 against the previous minus 0.5. Look, okay, that's fine. If suddenly it fails to meet this 3.3, again, I don't know. I mean, maybe they're shooting way too high, but aim for the stars, and eventually you'll get to one, right? Look, long story short, if it comes out, let's say close to 3, a little bit maybe around 3, I think that it still could be seen as a positive for the stock market. But if it comes out, let's say somewhere like 1.6 or like something like that, then it seems like that you didn't really, maybe you're overestimated, maybe the economy is not doing that good. So yeah, just be careful, be a little bit more on the cautious side. So going further, we have again some speeches here, and existing home sales. There we go. Again, another decline. Anything what relates to real estate right now, it seems to be a little bit on the lower side. So we're seeing, yes, existing home sales, the expectation on the lower side. Let's see if it comes out actually lower. Right, and finally on Friday, Tokyo core and headline CPI numbers are coming out. So we are expecting a higher number, which is an interesting one. Maybe that's why they are willing to go for that hike at the end of October. So we'll keep an eye on the Tokyo core CPI. This one is, like I said, yes, it's forecasted for September. So actually, no, wait. Let me just double check actually if it's actually for September. I think it's going to be for August, but let me quickly double check. I think where's my Friday, Wednesday, Friday, Thursday. Okay, September. Where's that? September 22nd. So yeah, wait, 23rd, 24th, 25th, and 26th. Yep, there we go. I don't have this on the economic calendar, on another economic calendar. Now that's interesting. There we go. Sorry, we're looking at the wrong day. Yeah, so that is for September. Yes, I'm sorry. Sorry to take it for stalling here too much, but just wanted to double check. But the forecast is right now at 2.8 for the core. The headline, what I'm seeing here, another source, is also expected to come out on the higher side, around 2.9. So, look, this kind of, if it does come out on the higher side, higher than the previous, then it kind of falls perfectly in line with the ideas of the central bank going for a hike in October. So, yeah. Let's keep an eye on this, of course. Like I said, let's see what the actual number comes out. If it somehow jumps into 3 zone, that's going to be an interesting one. So, and look, on Friday, I think the UN General Assembly is concluding. So it's going to be, for the full week, we're going to be seeing, politics shaking up our, feeds of social media. So yes, keep your eyes on that, because again, it's quite important in general what's happening right now in the world, and in general everything is unacceptable. The whole world is falling apart because, well, there are some bad actors. Anyway, look, the most probably important event on Friday, the economic event, will be the US PCE numbers. So the core and the headline. Now, at the moment, what I can see here, I don't really have anything for the year-on-year number, but neither the core nor headline. But I'm looking at another source, and I'm expecting a little bit of an uptick. So from 2.6 on the headline going into 2.8. So the forecast says like that. The core PC going from 2.9 to 3. Okay, look, if it comes out basically somewhere around 3 or maybe higher, I think that this is where it could boost the US dollar a little bit, but certainly the main focus will be the central bank, because at the moment we know that the central bank came out last week with some an interest rate decision and with the dot plot. So we are expecting further cuts going into next year, and actually until the end of this year we're expecting 2 more cuts. We're expecting another cut in October, and we are expecting another cut in December. So basically by the end of this year we're expecting 2 cuts. Again, is that like logical when your central bank, inflation target is at 2%, and your core PC is at around almost 3. Your headline is coming closer as well to 3, or actually, wait, let me just double check. I mean, what was the 2.9. So yes, the latest one. So it's also coming closer to to 3. So yeah, it's a tricky moment, I would say, because we understand, and I already talked about this last week, the week before that. I said that, look, at the moment the central bank of US, which is the Federal Reserve, is expecting kind of, or not expecting, but is focusing more on the job numbers, and they're focusing more on the labor market. And basically, we know that in the US right now there's not many layoffs, but at the same time not much job creation. So you have yourself a little bit of a stupid situation where what are you going to do next? Like, I mean, okay, for the ones who are currently employed, that's fine, you're okay, but for new people who are hitting the job market, or should I say, for the people who are new and first time, trying to get a job and everything, that's a little bit of a bummer, because, well, I said it before and I'll say it again. AI is the one of those that you need to blame for. Yes, fear as well in terms of like tariffs, and that's one factor. The other factor is AI, because certain jobs can now be done by AI, and especially the low skilled office jobs. And this is where this is what the companies are doing right now, because they're trying to cut costs, save as much money as possible, and basically not to employ too many junior roles, right? Or not to offer too many junior roles. So this is what you're getting, right? And this is where the issue is. Like, everybody's now, like, you can see those adverts where they're doing these, like, oh, go, like, disappear for a month and then create a chat bot or whatever, right? And then you can sell it to corporations, because then they can fire their staff and use your chat bot. So okay, great. That's what I'm saying. That's why it's a little bit, again, immoral, maybe, if somebody might say, but well, apparently that's the market we live in, right? I mean, everything is immoral now, so nobody cares about each other. But anyway, long story short, so yes, we're going to keep an eye on the core and the headline PCEs. Those are expected to come out on the higher side. If they do come out on the higher side, then this could play out nicely for the US dollar. Speaking of instruments, Japan, let's quickly jump into this one. Look, Nikkei 225 did correct back down a little bit after hitting this little area near the 45,709 zone, and yep, there we go. We retraced back down. On Friday, we sold off heavily, but then recovered. Look, I drew this arrow here, and basically, even if we do correct lower, as long as we stay above this steep upside line drawn from the lowest point of April, then there is a good chance for a rebound and a push back up. However, if we do clear this upside line right here, then certainly, the steeper one, then we can go towards this other one. So basically, I'm keeping this short and simple, and not really overcomplicating my life with Nikkei right now. If we do clear the current all-time high, great. I'm going to go to the upside. China, as I said to you, then yes, they they kept their LPR, the loan prime rate, the same. 1 year is at 3, and 5 year is at 3.5. So look, there is still a chance for a rebound and a push higher, so I'm going to keep an eye on this. And if we do clear this steeper upside line, then my next target is this other upside line, which could be a nice good target as well. Also, we are looking at this little area right here, this 14,455 zone, and then we'll just kind of take it from there. Jumping into the US very quickly. So let's have a look what's happening here. So we're retracing from these highs right now, at least it seems like that. We're forming something of a rising wedge. According to all the tier rules, such patterns tend to break to the downside, so keep that in mind. At the moment, we're flirting with this 46,138 zone. If we can get a nice clearance of that, I'll go a little bit lower, but of course the main focus for me is going to be the lower side of this rising wedge pattern. Like I said, according to all the tier rules, such patterns tend to break to the downside. So let's see if we can get a nice clearance right there, because it could be interesting actually. A nice good retracement back down could be, I think, useful here. And if that's the case, then my next target is somewhere around here, this 45,134-ish zone, and then yeah, we'll go from there. So, jumping into the S&P 500, look, this one is also retracing back down after hitting an all-time high on Friday. It's fine. Look, everything seems to be okay. Looking at the weekly chart here, you can see that we had a good run. Looking at the monthly chart in general, look at this parabolic move in a way. I mean, maybe October time could be the month where it will start selling off or something like that. But again, certainly we're watching this very carefully. And last full week of September, because next week we're going to have only 2 days, if I'm not mistaken. Let me just double check very quickly. Yeah, 2 days. So For now, it's an interesting moment here, and certainly I'm looking at this from the caution. I would like to see a larger correction back down, but again, let's see how today's day is going to play out, okay? Because let's not rush into conclusions. Because what could happen here is that we could rally again. We could pick up, it could jump higher here, clear the current all-time high, create a new one, and then, at the end of the day, come back below this 6,672 territory. If that happens, now that's when I'm going to consider it a little bit of a retracement back down. But at this point, it just is just a little bit of a tricky situation here. NASDAQ, very quickly, also good result in general. NVIDIA, NVIDIA, Google, Apple, those guys are really driving the market here to the upside. Apple with its release of the new iPhone. Tesla, not to mention Tesla. Look at this animal as well. Boom to the upside. Microsoft. Let's have a look at MSFT. There we go. MSFT, good result. Google. Google. There we go. Rallies, continues to rally. I mean, Amazon. There we go. Look at these guys here. Okay, Amazon is stalling a little bit, but certainly it's an interesting moment. At the moment in the tech world, everybody's in the tech, but whatever comes up must come down eventually, as I keep on saying. So I'm not trying to be very bearish or anything like that, but just a short-term correction back down could be nice. Let's jump into the VIX actually very quickly. Picking up the pace. So we had a jump here in mid September. Okay, very interesting. So hey, look, for now I would say that I am somewhat bullish on this one, but only if we clear the 200-day EMA. The US dollar index, very quickly, the US dollar excuse me. The US dollar index, the downside line here taken from the highest point of August is still in play. What I talked about last week was that if we do clear the downside line, now that's where I'm going to get a little bit more comfortable with the upside, because at the same time we're going to jump above the 50-day EMA and aim for the 100 or maybe 200-day EMA. Certainly then, that's when more buyers could join in. At this point, if you're looking for some lower levels, I think I will stick to this little area right here. I think that this is a little bit of a better option. Jumping into the German index DAX, let's have a look. So today we're seeing a retracement. This downside line taken from the highest point of August is holding for now. We're drifting lower, but I'm keeping an eye on this 23,376 territory. If we can clear that, I will go to the downside. So this is at the moment an important area of support. If we can get that clearance, great, more sellers could join in. For the upside, a break of this downside line here could attract more buyers, and if we can get that nice clearance of this downside line and the middle here of the Bollinger Band as well, the 20-day SMA, then yes, I'll consider some upside. Looking at the FTSE 100 very quickly, ladies and gentlemen, trying to drift lower a little bit, but certainly let's not rush into conclusion for now. It's just maybe a little bit of a retracement before another possible leg of buying. And if we do rebound from this flat upside line, if we do rebound from it, it's a little bit on the tentative side, don't get me wrong, but still a good line to consider. If we get a nice clearance of that, then yes, I'm going to aim for the 100 and the 200-day EMAs. But if we do get a nice little rebound here, wonderful, I'll consider a move to the upside. Ladies and gentlemen, let's jump into the Forex world. So the Forex world, let's have a look what's happening here. AUDUSD, we're drifting nicely to the downside after hitting the 0.67 territory here, and we cleared the steeper upside line. So now the question is, can we go a little bit more south? We're currently resting on the 20-day SMA here within the Bollinger Band. So if we can get that clearance, my next target is the 50, then 100, and the 200-day EMAs. AUDJPY, a little bit of a retracement, that's fine. Nothing major to say here, apart from that this is our risk on, risk off monitor. And given that we're seeing a little bit of a retracement here in the chart, in the rate, I would say that maybe the stock market could be seeing some take profit moments as well. So just kind of consider that. So at the moment, we're seeing a little bit of a retracement, and it seems that there could be a little bit more retracement. AUDNZD, one of my favorite ones lately. Look at this. I mean, this is just unstoppable to the upside. I'm really looking forward for a bit of a correction back down, but at the moment, it's difficult to make a call here because it still continues to push to the upside. And long story short, I think I'm going to stick to the upside given the current price action. If we do stay above the 1.1252, my next target is the 1.1319, and then we'll take it from there. EURUSD looking good. So, okay, look, we're getting in a little bit nice little move lower right now. We're getting a little bit of retracement. You know what? Let me just adjust this coloring here a little bit because, yeah, it's like this is. Right, okay, there we go, that's what I'm looking for here. Right, okay, so basically for now we are seeing a nice little retracement back down, which is okay. And the 23.6 becomes quite an interesting target, but for that one we need to see a clearance of this steeper upside line, which is a little bit on the tentative side maybe, but the steep upside line, if we can get a nice clearance of that, my next target is the 23.6. Very simple. Yeah, if we're looking for some higher levels, I think we can start looking at on a break of the 1.1830 zone somewhere there. If we can get that move, great, I'll go to the upside. EUROJPY, drifting back down. Ooh, very, very interesting. We're falling back below this 173.90 zone, the one that I looked at previously as a good barrier, a good upside barrier, which we broke. And I said that if we do push and stay above it, then yes, I'll go to the upside. At the moment, we are we're trying to drift back below it, and we kind of drifted already. We're just kind of flirting right now with that area. So if we do somehow stay below it, I'm leaning towards the downside, towards this little correction to the upside line right here. I think it's a good target, so let's see if that's gonna happen. Let's jump into the US dollar. Look at this madness here. I mean, on one hand, it's madness. On the other hand, hey, maybe it's an opportunity. So what I'm talking about here is that we are in a range. We're currently in a range, and we are currently stuck here. So yes, we keep on breaking. Oof, excuse me. Messages from deep within. We keep on breaking the sides of the range here, but we struggle to remain either above or below. So I will say I'm still going to observe the price action. I'm going to remain somewhat neutral, but I would actually, wait for a good clearance through one of the sides here and then do something about it. USDCAD also stuck here a little bit, but in a beautiful descending triangle pattern. So I talked about this last week, so hey, I think this is working out nicely. So while we remain inside the pattern, I'm not really going to do anything, but if we suddenly start clearing one of the sides, then yes, I will consider the next short-term directional move. My only problem with the downside is that if we do clear the lower side here, then the downside could be limited because of this little short-term upside line. US dollar against the Swiss franc. So I told you about the Swiss franc, that you need to keep an eye on it because of the SNB, the Swiss National Bank, this week on Thursday, and they're expecting to keep the rate unchanged. So I think that given that the market understands that, I think the market will remain as it is. There's only in this case the USD CHF probably will be affected by the US dollar itself. So yeah, but again, if suddenly there is some wording from the SNB If they suddenly say that, you know what, we are not really hoping, we're not really planning to see any more cuts or something like that, then I think that this is where the Swiss franc could strengthen and go lower. But for that, I would like to see a drop below this territory right here. In terms of the upside, where's my trend line? There we go. In terms of the upside, I will keep an eye on this downside line here. If we can get a nice clearance of that one, great, I'll go for the upside. Let's jump into, by the way, in terms of Euro CHF, the situation here again, it's on this lower side, but it's neither bullish nor bearish. I mean, I'll get more bearish if we clear this upside line. For the upside, ooh, actually, you know what? It's a nice little. Is this okay? Almost like a This is like a nice ascending triangle pattern, ladies and gentlemen. Okay, interesting. So let me just actually grab a horizontal ray here and see if this. Yeah, basically we have ourselves a nice ascending triangle pattern. However, somebody might say, but hey, is it actually an ascending triangle pattern or is it more of a veg? If it's a veg, ladies and gentlemen, we could see some down move here. But again, let's not rush into conclusion. Let's jump better into GBP. GBPUSD, so beautiful decline, almost, yeah, testing, let's say, this upside line. And the question now is if we can get a nice rebound here and a push back towards the if we can clear the 1.3588 zone, I'll go to the upside. For the downside, if we clear this upside line, I'll go to the downside. So again, that's my simplistic approach right now. GBPNZD, let's see how this one's doing here. Again, another push higher, at least trying to do so. Is this gonna break this downside line? Let's see. If it does, then I'll go to the upside. But if we look in general, look at this. We have been on an up move for quite a while now. Look at this, ladies and gentlemen. Probably from here. This is from 2022. And all the way here, ladies and gentlemen. Now that is a spectacular line. It has been on an up move from 2022, ladies and gentlemen, from September. So we're like exactly 3 years now in this uptrend. And look, eventually it will have to reverse back down. I think that it could travel back to somewhere like maybe 2, but again, that's a lot. If you want to measure, let's say if this has been the peak now, and we're now creating just lower highs, then maybe, yeah, we're ready for a retracement. And in that case, what we could aim for is something around here. This 23.6 is perfectly near the 2.21 zone. I think that's a good target here from 2.30 where we are right now. So I think it's a good aim. Let's keep an eye on that one, and then we'll go from there. But at the moment, let's not rush into the conclusion. First, let's see what's going to happen with this downside line. Very quickly on GBP CHF, drifting to the downside here, and look, looks bearish. It looks bearish, but some clearances are needed, and I think that the first clearance will be this. The next clearance will be this. So these are my targets, the 1.0650. If we clear this, I'll go lower, especially if we do clear the 1.06100. Commodity world, this is the next thing for me. Gold, look at this. A new all-time high as we speak, ladies and gentlemen. A new all-time high. We cleared the 3,707 zone. That was the previous all-time high. And yes, we continue to push north. And wow, I mean, wow. I think everybody's talking about the psychological 4,000 zone, and I think that that's quite logical in a way. And I think that this could be reached. When is it going to be this year? I doubt, but look, 3,800, closer to that. I think that's quite doable. I'm not saying that it's going to go there because anything can happen. It can shift very quickly, to the downside. But for now, yeah, it's just one-way traffic. Silver is also on the road to trying to reach maybe the 50. I think that that's going to be the ultimate target for now for silver, the psychological 50 level. And then we'll take it from there. Palladium. We're still stuck in this little kind of squeeze moment between the two trend lines. When we get a clearance through one of those, then I'll consider the next short-term directional move. Platinum is also stuck in between the trend lines, so also the same story. Copper. Look, with copper, I told you. I already have been telling you this for since we had this little correction back up here in the beginning of August. And I said, look, we seem to be forming a bearish flag. So if we can get a nice clearance of this upside line, then yes, great. More sellers here could join in. We could target that 4.33 zone, and if that gets clear, the forthcoming lower low will be confirmed. Oil is also, it's rebounding today, but in general it's on the bear side, so not much to say here, apart from just I'm waiting for a drop below the 61.40 zone, and then we'll take it from there. For the upside, I would prefer to maybe wait for a push above above the $66 mark. I think that's quite logical, just to be a little bit more on the safe side. Natural gas is, it's I talked about this last week, and I said to you that look, it seems like we're flirting with that psychological 3 level. We're just hugging it. We're not really doing much. So yeah, I'm not really, like I said, I'm not gonna experiment here too much. I'm just gonna observe the price action for now. 2.89 is the barrier I'm watching for downside. If we can get that move, great. I'm gonna go for that 2.68, and then we'll take it from there. For the upside, I need to see actually a clearance of this 3.20 zone, and then ideally a break of the downside line. Coffee here. Look, beautiful decline. Everything's fine. Look, we found good support near the 365 territory, and now the question is, can we see a move to the downside towards this 200-day EMA? If we're looking for some downside here, then yes, a break of that 365 area is needed. If you're looking for some upside, I think the better option right now is to wait for a push above this barrier, this 384 territory, just to be a little bit more on the safe side. Cocoa, very quickly on cocoa, very nice near key area of support. I'm loving this. 3,205 zone. I need to see 7,205 zone. I need to see a clearance of that in order to go lower here. Jumping into corn, just a quick glance. Yeah, recovered a little bit, but that's fine. Actually, let's see if this is going to make sense where we are right now. Yes, beautiful. We retraced 50%. Now we're bouncing around here. So if you're looking for some upside, breakthrough this area is required. Wheat drifting back down, so it's a little bit not very interesting right now. Sugar for me is very interesting. Look at this once again. 15.5 zone provided good support. Yes, we violated it a little bit, but still it's okay. We are, we're pushing back up. Am I getting very bullish? No, I need a clearance of this downside line, but if we can get one, great. If we clear the 15.5 zone and stay below it, I'm going to lean towards the downside. Cotton, finally, from the commodities overview here, and with cotton here, we're stuck in a descending triangle pattern. So waiting for a better move here. If we can get a clearance through one of the sides, then yes, great. I'll consider a move. Like either to the upside or to the downside, depending on which side we could break, and if we will break them. But while we remain inside the pattern, yes, the pattern, we remain kind of, either bullish or bearish, but actually neutral, sorry. getting these messages this morning from deep inside. But yeah, like I said, while we remain inside the triangle pattern, I'm not really touching this one. And finally, the cryptocurrencies for dessert, ladies and gentlemen. So Bitcoin. Let's have a look. Yes, drifting heavily to the downside. Boom. This 118 zone, I drew this one. Last week, and I think that this is an important area to watch. So yes, we drifted lower, but we came back to the 112 territory. This is one of my favorite ones right now, the 112,000 zone. If we drop again below it, I'm leaning towards the downside. For the upside, 118 is needed for me. A break off, of course. Bitcoin Cash, wow, this is like, what a turnaround, honestly, on this one. I talked about this, and I said that if we do drop back below this downside line, I'll go lower, but I'll get even more comfortable with the downside if we do see it drop below the 573 territory. There we go, boom to the downside. And my next target is the 526. So let's see how this one's gonna play out. Ethereum is, yeah, it broke below the lower side of the triangle, and certainly let's see what's going to happen here next. If we can see it drop, if we can see a move towards that 4,214 zone, we got the move. Can we see the 4,065 territory? We got the move. Now the next question is, can we see a clearance of that 4,065 territory? If we can get that clearance, amazing. More sellers here could join in towards the aiming for the 100 and the 200-day EMA. Ripple, very quickly. Ripple, beautiful decline. Again, beautiful. Yes, we are now resting near this key area, this 2.70 zone. We fell below that 2.95 area, and now the question is, can we clear the 2.70? If we can clear the 2.70, then yes, I will go lower. Litecoin, beautiful decline as well. Beautiful clearance of some key areas of support, like this one, the 106. We're flirting with that 100 zone. 102 is where our 200-day EMA right now is on our daily chart. But yeah, it's an interesting moment here for now. It's an interesting area where we are at. So if we can get a nice clearance of the 100, oh yes, I would love to see this one moving lower. And I think this is what we can keep an eye on. This upside line drawn from the lowest point of April of this year. Look at this. This is where we were. And this is where we were back in April this year. We were around like $60 mark, just a little bit above that. So, nice move here to the upside, right? Almost doubled. So congratulations to those who picked up, the cryptos around here. Anyway, right now, like I said, it's the 200-day EMA which is the one that's helping here the bulls helping this the bulls from seeing LTC falling off the cliff. But of course, maybe a slow move lower could be possible, especially if we clear that 200-day EMA. Dogecoin again, a similar story, drifting lower to almost aiming for our upside line, and then we'll take it from there. Polkadot, beautiful decline. There we go, testing the upside line as well. Everything is selling off beautifully, and hey, the question is now, can we remain inside this ascending triangle pattern? Because if that's the case, well, ladies and gentlemen, then certainly if we remain inside the pattern, then yep, I will consider nothing. I will wait for the clearance of one of the sides. And then I'll do something. While we're inside the pattern, not really touching anything. And finally, Tron, one of my favorite ones. Also falling off here. That's great in a way for the bears. So I'm aiming for the 100-day EMA right now, at least for now. And then we'll just kind of take it from there. So long story short, if we do remain below the 0.3373 territory, my next target is the 100-day EMA. And ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. Once again, a reminder that tomorrow I'm holding a webinar, so tune in. It's going to be I think it's going to be a good one. So you'll be the judge. So be the judge and join in the webinar. You can find the details in the description of this video, and yeah, we'll go from there. Ladies and gentlemen, thank you very much. I'll see you on Wednesday. So this is going to be the last session for this week, because next week is also going to be a short one, so it's going to be up and down. But again, for this week, the Markets Talk webinar is going to be on Wednesday. On Friday, where there won't be one. So, ladies and gentlemen, thank you. I shall see you on Wednesday, right? See you on Wednesday. Bye bye, everybody.